Okay, welcome everybody. Today is November 17th. I had to look down. What day is it? Welcome to the Reverse Mortgage Calculator HECM, which means government reverse, versus proprietary reverse mortgage. And I've titled this, yes, we're going to do the reverse mortgage calculator stuff, but as far as the HECM goes, here's a teaser. Not much has changed from last week to this week, thankfully. But the proprietary, man, the proprietary keeps slipping. So, I'm going to go over the numbers for you. I think a better use of our time together, I'm going to try to keep this short. Better use of time is going in and showing you what's changed with the proprietary reverse mortgage and why it's changed. And then at the very end of this video, I think this is going to be super beneficial. We're going to look at different scenarios, and I'm going to kind of compare and contrast the HECM versus the proprietary and recommend when you should use a HECM versus when you should use a proprietary. Now, again, this is high level and we might not go over your exact scenario. So if you do want to get in touch, if you have any questions after this, first of all, if you have questions during this while you're watching, then you can go ahead and just type them in below. Also, if you have questions afterwards, you want to reach out to me. Here, I'm just going to share my screen right here. Let's see here. We're going to do this. Boom. All right. So I'll take myself off the screen too. You can always visit my website, reversequotes.com. You can give me a shout at 888-309-9705. Visit the website. You can see on the right over here, I'm kind of scrolling down. You can put your information in, hit get quote, and we can pick a time to chat. You can also email me at jason@keyhomelending.com. But you can see that all that stuff is scrolling on the bottom of the screen right now. The last thing I'll show you about this is if you want to see how other seniors feel about reverse mortgages, I've got a bunch of video testimonials and letters and all that other fun stuff down here towards the bottom of the website. All right, enough about me. You know how to get in touch. Let's move on to stuff that's important. First of all, as you understand, the one-year Treasury bond, it does have a saying in how much you can get with a reverse mortgage. Normally, as rates go up, you get more. And as rates go down, you get less. But that's a correlation. It's not a one-to-one correlation. So you can see, let me share this PowerPoint real quick here. So you'll just see me do this. This is, we're not live, but this is what I do every single time. I can't figure out how to get it smooth. So there we go. All right, now we're gold here. So we're gonna see real quick. That's the main the thumbnail that you clicked on here. You can see I'm happy about the HECM, not so happy about the proprietary. All right, so we'll go into this screen and I'll illustrate what's going on. So we saw that last week on November 9th, the one-year Treasury rate was 4.75%. Today, actually, I did these slides yesterday and then got slammed with time, got a couple closings to set up. So kind of got away from the business, that got away from creating this to actually work on closing folks' reverse mortgages for them. Imagine that. So yesterday, the one-year Treasury rate was 4.62. It has now gone back up to about 4.71. So I'm watching it. So it's a little higher than it was yesterday, but the loan sizes are the same. They're from there. I took them this morning. So you can actually see that for a 72-year-old with a $400,000 home value, the HECM is giving a little bit more money. And that's going to be rare. You're going to see as we go through different ages and different home values that the HECM is basically the same as it was last week. But the proprietary, this darn thing keeps dropping. But it's not the loan size that's dropping. And I'll show you in the next slide. I think it's the next slide. So you can see for a 72-year-old with a $400,000 house, the proprietary was 141 last week, and now it's 136.8. So let's go to the next screen right here, and let's look at what's happened. New proprietary movements, which really means what's happened in this world. What keeps going down? So a couple things. The secondary market, how can I say it without boring you to death? The secondary market for these things, there's almost no demand. And again, it's because rates are still high and because the housing market has dropped. So there's very few buyers for these right now. When we close your loan, it's well and good, but a lot of times these companies bundle them up and they get investors on the secondary market. Just the exact same thing as regular old mortgages. So same thing with the proprietaries. So what we can see here is where previously there were no origination fees. They just across the board, just about every single lender, no, not just about, exactly every single lender now requires a 1% origination fee, and it goes to the lender, not the broker. I don't get it. I don't get to touch it. I just have to pass it on to you. So they're now charging 1% origination fees to the lender. They're also not giving credits, not giving closing cost credit for third-party closing costs. So previously, what I was able to do was kind of manipulate the rates a little bit to give you a credit for your third-party closing costs. And that's how I was getting $1 million loans with like a total closing cost of $800 or so. So that's all in the past. I think until the market starts to improve, they're not gonna bring back the credits. And what that means is with the 1% origination fee and backing out the credit for the third-party closing costs, there's lower loan sizes for this. So I'm going to show you what I mean right now. So let's take a look at our age 55. No cartoons this week. I want to blow through this. So then the most important thing is I want to kind of compare and contrast at the end of this, the HECM versus the proprietary reverse. Just took a drink. So at age 55, what can we do? Well, we know if you've been with me for a while, if you're brand new, you've got to be 62 to do a HECM, but you can get a proprietary at 55. So that's why the HECM is, and you see those NAs across the board. So let's look at the home values at age 55 for the proprietary reverse, and we'll compare last week versus today. At a $400,000 loan size, it's just slightly off. At a $700,000 loan size, it's off about $3,000 or so. At a $1 million $1 million home value, you're looking at a $283,000 loan size instead of a $288,000 loan size. And at a $2 million value, now we see a little bit of difference. There's about a $13,000 difference between last week and this week. And the only difference is, again, it's that the lender's charging a 1% origination fee. So that goes into what you can get, and there's no credit for the third-party closing costs. I should say that the fees, they all do get rolled into the loan. The only thing that you have to pay out of pocket for whether it's a proprietary or it's a HECM, the only thing you pay out of pocket is the counseling, which is about $1.50 or so, and the appraisal fee. So that's it out of pocket. The fees just kind of eat into the loan size. All right, so that's age 55. I told you we're gonna rock through this thing. So age 62. Now the HECM is in play because remember, you can get a HECM at age 62. So HECMs across the board, numbers are the same from last week to this week. And this is at age 62. For the proprietaries, we're very close at the smaller loan sizes, but as we get to the bigger loan sizes, once we hit $1 million, look at that, 303 versus 308. And at 2 million, we've got 603 versus 617. So really, if you think about it, it isn't a drastic change at the lower ages. You're looking at less than or about 1% as far as a difference in the proprietary. And again, the HECM is just holding strong. Let's go to 72, see if we have anything here. 72, what can you get? All right, so here the HECM is actually at the lower loan sizes. At the home value of 400, it's actually giving you a little bit more cash. 700, it's just about equal, and $1 million and $2 million, the HECM is equal. And by the way, you'll see if you look at age 62 and 72, you'll see that the loan size for $1 million and $2 million is the exact same for the HECM. Why is this? Well, if you've been with me for a while, you understand. But the maximum home value with a HECM, again, the government reverse mortgage, is $970,800 buckaroos. So whether your home value is $1 million or $2 million, both of those are over 978. So you'll see the exact same loan size. Hope that makes sense. If you have any questions, just write them below, or you can email me, call me, smoke signal me, go to Reverse Quotes. You know what to do. All right, proprietaries. Proprietaries at the older ages, they're dropping a little bit. So you can see now we've got $400,000 value goes from 141 to basically 137. 700 goes from 247 to 240. 1 million goes from 353 to 344, and 2 million goes from 707 to 689. So you can see that that's kind of a steeper drop than it was at 62, and definitely a steeper drop than it was at 55. So we can see we're getting a trend here. The proprietary reverses, they're lowering, or they're getting hit harder at older ages. Let's see if it continues. Age 82, let's go. The HECM, it's the exact same thing as last week. So no movement on the HECM. Really, the only movement that we've seen so far is on a $400,000 house at age 72. That's it, really. So HECM's there. Proprietaries, we've got about a $5,000 difference at a $400,000 value. And then it just goes up from there, about 7,000 with a $700,000 value, 10,000 at $1 million, and yep, 20,000 at $2 million. But it's still holding. So we've seen loan sizes drop, but we're still holding it just right about 1% or a little bit less, depending on age and loan size. So not that bad with the proprietaries, but you do see the difference. Now, those were 82-year-olds. Let's see what happens if you're 92. Not many of you are 92, but if you're looking at this for a grandparent or a parent who's in their 90s and they need home health care, reverses are awesome. So at age 92, same thing with the HECM. You can actually see, let me go back real quick. For 82-year-olds, 72, 62, 55, or 62, 72, and 82, you can see that the winner is in red. So for example, if we look at a 72-year-old with a $1 million home value, we can see that the proprietary at 344,100 is giving more than the HECM at 335,300. So if you need to max out your cash, the proprietary is still going to help you a little bit more, but that's why you see red. I forgot to tell you that in the beginning. So let's get back to 92. So the reason why I'm illustrating this now, though, is at this older age, the HECM actually gives more money than a proprietary. The only reason to get a proprietary at the age of probably mid 80s or higher is if you absolutely need to either get all your cash right away, or if that difference, let's say in a $1 million home where the HECM is 575 and the proprietary is 502, that's a pretty big difference right there. So really the only reason to get a proprietary reverse it, in your 80s or 90s is if you need all the money up front, because the HECM will only give you a certain amount up front. We'll do that in the next slide. So anyway, you see that the HECM is unchanged at age 92. The proprietary is still down. So you can see at a $1 million home value, it used to be 513. Now it's 502. 2 million. We're $21,000 less. So it's right at about 1%. So really 1% across the board as far as loan drops for the proprietary this week. So now let's go into the HECM versus the proprietary, because I'm giving you numbers every single week, but I haven't really spent a lot of time in sharing what makes more sense, what scenario makes more sense. So let's break it down. Here we go. HECM versus proprietary. HECM is on the left, proprietary is on the right. So look at rates real quick. The HECM, the interest rates for the HECM are about 3%, not as a steadfast rule, but anywhere between about 2.5% and 3.5% lower for the HECM than it is for the proprietary. This week, HECMs are steady, and it's really, I believe it to be, because again, correlation, it's because the T-bill hasn't gone up. It's actually kind of stayed steady or dropped a tiny bit. So the HECM, their loan amounts have stayed steady, whereas the proprietary, again, because of that 1% origination fee to the lender now and not crediting the closing costs, the proprietary loan amounts are dropping. They have dropped about 1% this week. So HECM's got lower rates, loan sizes are steady. You get it. Next, HECM versus proprietary. The HECM has the line of credit with the HECM. I got to do a video on this. I've just been putting it off, but it's something I've got to do. I'm going to do it in the next week. It's there. I've said it. You can hold it to me. The line of credit with the HECM is the best, absolutely the best feature of reverses, besides being able to get money and not pay it back. So the line of credit with the HECM, real quick, it grows forever tax-free. So, and I guess I should say I'm not an accountant, I'm not a CPA, so check with your accountant or your tax advisor, but there are no taxes on the reverse mortgage line of credit because you're borrowing the money and you will pay it back. So that's the reason why. So the line of credit, every single you set money in that line of credit every single year, it grows, it grows, it grows, it grows, it grows forever and ever, amen, or until you leave the house. It's pretty awesome. So a lot of people are using it strategically. We'll get to that on the next slide. The proprietary line of credit in some states, for example, California and Florida, the proprietary does have a line of credit, but here's the deal. This is the fine print, and this is why you work with a broker like me who's knowledgeable about this and will explain all this fine print to you, because you gotta understand it when you get these things. So the proprietary line of credit, it is good for 10 years. So the proprietary line of credit only lasts for 10 years, and it gets growth of 1.5% for the first 7 years. Then the next 3 years, there's no growth on it. First, again, the HECM line of credit, which grows at, right now, I quoted somebody yesterday, it's growing at 7.98%. That's pretty decent right there. All right, so now you understand the line of credit with the HECM versus the line of credit versus the proprietary. Yes, the proprietary is still giving slightly more cash to you as long as you're in your 80s or lower. So if you need to milk every single dollar out of the house, the proprietary makes a little more sense. If you don't need to milk all the cash out of your house, or you don't need all the money up front, then the HECM makes sense. Now, one of the things that the proprietary does, which beats the HECM every single time, is if you want all your money, you can get it. So with the HECM, you see first year only 60% lump sum. With the proprietary, you can get 100% of your lump sum right away. So what else do we have here? We already went over the no closing cost credit and the 1% origination fee on the proprietary. That's new. The only other thing I'll go over on this slide is with the HECM, there's something called a collateral desk review with the appraisals, and about 20% of the time they require a second appraisal. But most of the time, 80% of the time, they don't. So that's, I guess, okay, last thing I'll say is the HECM, as you understand already, the HECM, the maximum home size is $970,800, and the proprietary can go up to like over $5 million. So if you have a $3 million house, if you have a $2 million house, if you have a $1.2 million house, you've got to still compare the proprietary versus the HECM. If your house is worth $1 million or lower, unless you need all the money up front, right now the HECM is winning the game. So more stuff, HECM versus proprietary. All right. So a couple things. Credit line growth. That's the HECM. If you're looking for a retirement safety net, if you really want to see, I've got a HECM closing tomorrow in Boca, good friend George. And he came to me because, number one, he wanted to eliminate his mortgage payment, but more importantly than that, he makes good money. He wanted that line of credit. He wanted that retirement safety net. So we compared the HECM versus the proprietary, and that safety net is going to grow forever with the HECM. And remember, with the proprietary, it's only going to be there for 10 years. So George rightly, intelligently, once he got all the info, chose the HECM. HECM is actually, if you look at monthly income, barely anybody does it. People always look at it, don't they pay you every month with a reverse mortgage? Well, yes, they can, but is it the right thing? Normally it's not. But if it is the right thing for you, I do a few of them per year, but not many more than that. If you want monthly income, you got to do the HECM. If you don't need all the cash immediately, do the HECM. Proprietary, obviously, if your mortgage balance is super high, if you need home health care, a large amount. So normally when it gets to hospice, or you have just a ridiculous amount of money that you need just for the first year, if you want to milk it out quicker, if the HECM doesn't work, then that's where the proprietary comes into play. So hope this makes sense. I'm not covering everything. So if you have any questions, please give me a shout, whether you want to go to reverse quotes, whether you want to give me a shout, 888-309-9705. I'll put my contact info up there. There you go. you want to call me, you want to email me, that's jason@keyhomelending.com. This stuff gets a little bit tricky. This is a short video. I'm not going over absolutely everything, but high level, I wanted to kind of show you, hey, what makes sense and what doesn't make sense. So I hope that makes sense. And again, if you have questions, go ahead and just let me know. Give me a shout. So let me see if I can stop sharing this right here. Let's try to escape out of here. All right, now we're back to there. I'll put my face up real quick. So now you've got it. You've got it for this week. You understand the proprietary reverse mortgage took more hits. One thing that I can say I'm pretty optimistic about is the fact that the interest rates, if we're looking at the overnight rate, it's actually stayed pretty much the same. In fact, it's dropped a little bit from last week to this week. That's why we're not seeing any more drops in HECM loan amounts. So hope this makes sense. Again, if you want to get in touch, you can contact me. I'm glad to help you, and I'll do everything I possibly can to help you. My name again is Jason. You'll see another one of these coming out next week. My in-laws are actually in town, so it's meant to do this yesterday, but with all these closings and in-laws coming in and everything, it gets kind of tough because it takes some time to build the slides and get all the information for you. However, I will do my best to get you that line of credit video, because the reverse mortgage line of credit is just so awesome. All right, I hope this helps. If you need me, you know how to get in touch, and take care of yourself.